Hey traders, Raghee here. Welcome to Charts and Coffee for this Kapow. Where's my Kapow image? There we go. For this Kapow Wednesday, FOMC expected to hike rates by a half point today. So that is what is on tap for today. So two things, just kind of general ideas to help you navigate. The way I'm going to be navigating today is, gang, find the trends, step one. Step two, find the trends. And step three, follow the trends. Find the trends up, find the trends down, and follow those trends. Now, catalysts like Kapow can give us opportunity to see those trends correct. Gang, this is trend following 101. We can do it a lot of different ways. We can trend follow with a lot of different tools, but at the end of the day, find the trends, follow the trends. There's not much I can promise you, obviously, when it comes to trading, but I can promise you this: buy the dip and sell the rip is never dead, right? It sometimes becomes a meme. Sometimes people will mock, and that's okay. Just remember that what those folks don't get is that in order to buy the dip, we need a trend, an uptrend. In order to sell the rip, we need a trend, a downtrend. So there must be at least one or two or more tools, whatever you need to visually identify and have confidence in that you have a trend. Have some tools that do that. Now, I say that we have some tools for you. If you haven't already, countdowntrader.com. Gang, they're free. You don't even have to put in your email, which, that's kind of unusual anymore. You just head on over to countdowntrader.com. And you know what? Let's do this right now because it's really important to me that everybody here have a set of tools, free tools, gang. These are the tools that built my career. These are the tools that I was using as a very young, at one point inexperienced, downright clueless trader. This is how I got a clue. This is how I became a trend follower with the kind of confidence that I've been able to have and the success that I've been able to have. Scroll down the list, right side, free downloads, gang. Click on the Thinkorswim if you're on TOS, and it will take you to a box folder. You'll see the three files. One of them is the wave and grab. One of them is the automated Darvis 2.0, and the other is propulsion. Get at very least the grab candles on your chart. It will absolutely help you find that clarity in the market. So kicking it off with that, and then let's jump into questions, because after all, this is what our time together here at, well, caffeine is probably the number one goal, right? Little caffeine, caffeinate and dominate. But yes, it's all about your questions. Let's go ahead and jump into that. And one of my favorite people. Hello there, James. How are you? XLP, KO, and J&J all have similar setups. Okay, so XLP, trend broken, above the 200 propulsion, but still bullish bias. Okay, KO is a little bit better. James, just kind of splitting hairs, right? Two red grab candles on XLP, zero on KO. But I see what you mean. We're pushing on the wave. And then Johnson & Johnson. Johnson & Johnson's probably a little bit better than KO. So we have really definitely what they share in common is pressure on the trend that has preceded this rather fresh chop. So I'm with you there. But I would say Johnson & Johnson looks better than Coke. Coke looks better than XLP. And this is where we can start looking at some boats, individual stocks within the tide, the sectors or the indices. And I would imagine with likely far better results when we're focused on that relative outperformance, those outperformers. If they can break yesterday's high, would I enter today? So now, if you're talking specifically about the minor low that might be in place, what today is looking like right now is an inside day. But yes, I mean, Coke, I'd focus on possibly buying with a conservative position sizing in the wave. I'd say the same goes for Johnson and Johnson, and I'd pass on XLP because Coke and even Walmart and even Altria may be better boats within that XLP tide. So this is what I mean. We head on over to the multi-chart, which is, by the way, gang, this is a layout that you can create with grab candles and the trend flags that I give you all in the membership. Options room, futures room, sector secrets, mastery, of course. You can build this flexible grid with whatever comfort level number of charts that you'd like. And this is the best way. There's just really no better way to find relative outperformance than grab candles and those trade flags. And take a look at XLP. Mo is a standout. There's Co, right? Walmart's holding its own. Let's see. Mondelez, it's holding its own. Take a look at those trends that were up or are above the 200 propulsion that do not have the red grab candles. And I think that's going to be our best bet. And as I say that, I do want to mention that today in the Sector Secrets Mastery, and where are my charts? Today in the Sector Secrets Mastery, we're gonna jump into, probably the most significant watch list rebuilding, I should say, that we've done likely since January. So on one hand, it's a little frustrating because even personally, am coming off having to take some paper cuts. I think right now, 3 of them in a row. That's the way the trend break in April, fired off my protective stops. However, in January, I had a similar frustrating event. First week of the year, loss, 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 loss. First 4 trades of the year. Thought, 2022 is not going to be my year. We paused, we rebuilt the watch list, and by the 3rd week of January, that's where we started our tear through February, March, April, 3 quarters of April, because the technical trends and the macroeconomic trends finally dovetailed. And that's really what we're on the precipice of doing again. So on one hand, it stings because the watch list rebuilding comes on the heels usually of these transitions, which for a trend trader, really for any trader, but for a trend trader is never fun. But then what it does is it reveals the new batch, the new best of breed that we'll be taking advantage of. So, pretty exciting time. All right. So, hey there, Alan. The goal is to see what everyone else is seeing, right? Yes, it is. But in such a way that, we remember the reasoning for that, right, is that no winning trade is done because we were alone in it. Winning trades are usually because either we're getting in just before the herd, just before, if we're shorting, we're getting in just before the herd. If we're getting long, we're getting in just before the herd, or the herd is already there and we've found another opportunity to continue to, imagine stampeding buffalo. That's kind of what your average retail trader and investor does. You all aren't average. You're here at 9:09 in the morning educating yourselves. But most sadly, traders and investors are not putting in the commitment and the study that you are. So they behave in a fairly similar way. They kind of follow each other around. And so that herd mentality is very much what rules the market. But we just need to take advantage of that, acknowledge that. So absolutely. That's why I don't get too cutesy with my settings on indicators. That's why everything is about observing the underlying market trend in the path of least resistance. Which way is the flow most likely to go? So the ES minor low finished yesterday. May the 4th be. I put out in the free video that I did yesterday. I put out in the free video that, look, if it was any other day but Kapow Day, I would be pretty confident in saying that we would be looking at long calls off that 4100, 4160 to 4102 area, double 2 Darvis levels, nice zone. And we'd likely be buying SPY or ES futures calls or relative outperformers in the sectors and or stocks within the indices. So with that in mind, I'm slouching, trying to unslouch here. All right, there we go. I got a new chair that when you slouch, it actually lets you know, and it gets rather uncomfortable. I like this chair a lot, though. So anyway, there we go. Stand up straight. I have this memory of my mom poking my lower back when I'd slouch as a kid. All right. So anyway, if it were any other, if it were any other day, if it were any other event on the horizon, I'd likely have us long for just a 50% retracement. So a lot of folks have asked me, okay, Rog, I watched your video last night. I get that you've warned us about, the volatility and so forth, but just so I can get the mechanics of the trade, how would we look at the target? Look at the last major move. We can talk about Fibonacci in really complicated ways. Luckily, when I look at Fibonacci, I don't look at Fibonacci as a trading tool because you know what? It's not. It's not a trading tool. It's far bigger than that. It's a mathematical law of nature, right? Nature expands, nature contracts. Leonardo da Pisa, we call him Fibonacci. It actually goes back to Indian mathematics, but I won't get into all that. Um, when we look at the rules governing nature, that's what Fibonacci decodes. So if I'm looking at the nature of contraction and expansion in the markets, which we know a little bit more, you know, as sell-offs and rallies, right? Let that be how you view using retracements. With that being said, um, if we were to bounce from that low, we're roughly going to get up to, I would pay attention to 42.30 initially, and then about 42.80 to 42.85. That's going to be a 38.2 to 50%. I like the 50, which is why it's brighter. Something about that halfway mark, something about that 50%. I used to do nothing but 50% retracements for about the first 3 to 4 years of my trading. They just work, right? And then interestingly enough, it also starts to get us in close proximity to the wave. It also starts to get us in close proximity to the 21 exponential propulsion dots. So there's a lot in that area, and we're right there below 4,300, which is a major psychological level. If we were able to bounce, you can see we're already doing a lot of that bounce. That's where the upside target would be. So I'll just pull a quick Fibonacci on the last major move. So, and you know what else is coming out today, Alan? We are going to get, I think, the first or second trailer for the new Obi-Wan Kenobi series that's going to be released on the 27th. Yes. So really looking forward to that. Yeah. May the 4th be with you. Exactly. Exactly. All right. Next up. Hey there, Andres. Good morning. How will the EU decision to ban Russian oil affect prices? Also, does the Fed's monetary policy have any effect on CL prices? Okay, so two-part question there. Anytime we're talking about commodities, but really anything, but let's talk about commodities specifically since that's what the question is. The question is always, if we cannot just reduce it like a bouillabaisse down to, is this a demand narrative or supply narrative, right? So let's go to economics 101, because that is, after all, what moves the markets really. Is this a demand narrative or a supply narrative? So if the EU is going to ban Russian oil, that's a retraction of supply, right? That's less supply. Well, less supply usually equates to strength in whatever that commodity is. So I would say, just in the most basic sense, if we're taking supply away, that's going to be a little bit of strength. And then the second part, does the Fed's monetary policy have any effect on crude? Well, the Fed's monetary policy will be to continue to hike rates, which actually strengthens the currency, the US dollar. We've been taking advantage of this move because, look, the Federal Reserve, in fairness, has been projecting what their monetary messaging and policy is going to shift to when Powell basically admitted we got the inflation narrative wrong. And they finally said, hey, you know what? We have to now change our messaging, change our policy. That happened late Q3, Q4 of 2021. And that started the US dollar's movement higher, which sends the euro initially lower because there's a negative correlation or inverse correlation there. Stronger dollar usually does put pressure on commodities. But then remember, we can't use correlation and knee-jerk response to trading. We have to ask ourselves, we also have an inflation problem. So that's been what's keeping commodities moving higher. And probably one of the best trends out there is corn. Look at ZC, a little less CL, a little bit more ZC. But generally speaking, I would say stronger dollar puts pressure on commodities, but we always have to look at the individual pieces of the macroeconomic puzzle, then put it together, right? I think, I'm not a huge Taleb fan. I think obviously he's extremely intelligent, but one of my favorite lines from Taleb came in the form of, and I'm paraphrasing here, that correlations are charlatanism. Most traders look at correlation, not causation. We always want to do the latter, what's causing it. And when we see what's causing it, we realize that there is an environment where certain commodities can continue to move higher with the dollar. I don't think it's going to really make much of a difference for crude. I really don't. And by the way, I'd rather look at some of the oil stocks, and especially those that are related or benefiting from the continued uptrend in natty gas. So think XOP as a group that I'd look at the individual stocks that are still in uptrends. Can we take a look at USO? Same conversation, Zion Spear. Whatever's happening crude, of course, is then going to trickle to the ETF that keys off crude. I'd still rather keep an eye on the likes of XOP and UNG and natty gas and FCG as opposed to crude. We're talking about the best energy corner of the market. It's still natty. It's still natty gas. All right. Let's see. Next up is, why are the spreads on the July? Hang on here. Let me take a look. Why are the spreads in the July 15 XHB? And my platform's over here. July 15 XHB so wide? Well, my friend, take a look at the open interest. There is none. I'm looking right. Am I looking at the right symbol you're asking me for? Yeah. So if you're ever curious about spreads, if you're ever curious about movement in an option, and you're looking at the 22 puts, and am I looking at the right thing? XHB 22. Oh, July 22. Okay. Why are the 15 July puts in general? Okay. So why? Look at Mr. Walker, look at the open interest. It's literally, I'm not exaggerating, it's zero. There's your answer, my friend. If there's no liquidity, there's no one trading it. If there's no one trading it, the spreads are usually going to be pretty wide. If it's an expensive option, the spreads are going to be pretty wide. So know the difference between, hey, this is an expensive option and there's just nobody home. It's crickets and tumbleweeds, my friend. And there's your answer. Next up, for the June FOMC meeting. All right, let's jump on over to our countdown website. Hey there, PJ. So for the June FOMC meeting, is the Fed Fund Futures pricing in 75 basis points. All right, so remember, we're at 20 to 25 now. We're expected to be by 2:01 p.m. today, 50 basis points higher, half a point higher, which would put us at 75 to 100. And then if we're 75 to 100, you'll see right here that 92% column, almost 93%, represents another half point hike. The 3/4 point hike conversation's down at a mere 7.25%. We'll know better what traders are thinking about June after the presser. So wait till after the 2:30 presser is complete. Take another look at the June columns and ask yourself, have the 150 to 75, which represents a half point hike, or the 175 to 200, which represents the 3/4 point hike. There's a tiny bit, oh my gosh, expecting a full point. But look at the percentages. It's very, very low. So there is a 7.25% chance, but we're still looking at mostly that half point hike. So thanks for the question, PJ. Great question. All right. And again, the target rate probabilities are, where will the rate be, right? Where will the rate be once that meeting or once that announcement has been made? All right. Gang, I don't know how that 20 minutes flew by just like that. Oh my gosh. But our time is up here. But thank you, as always, for being a part of Charts and Coffee. We'll be back at it again tomorrow at 9 a.m. I look forward to seeing you then. Heading over into the Sector Secrets Mastery if you haven't had a chance to join us there. And of course, I know you have a choice of a lot of great rooms. If you're looking for a very active community throughout the day and you want to trade some options on stocks and ETFs, check it out, simplertrading.com/join/sector. Have a great one. If this content's moving the needle for you, smash that like button. Be good to each other, and I'll see you tomorrow.